Hey everyone, welcome back to Corporate Decoder, the place where we look at corporate filings so you don't have to. Today we're diving into a proxy statement, which is a document a company sends to its shareholders before a big meeting, kind of like a cheat sheet for voting on important decisions. This one from SERVOTRONICS Inc. has a bit of drama brewing. It looks like there's a battle for control happening, so let's decode what's going on. Okay, first things first, this is a Schedule 14A, which means it's a proxy statement. And it's a preliminary one, meaning things could still change before the big shareholder meeting. SERVOTRONICS is asking for your vote on some key items like electing directors and approving executive pay. But there's a twist. Another company, Beaver Hollow Wellness, is trying to shake things up. Beaver Hollow Wellness, or BHW, wants to nominate their own people to the board of directors. That's called a proxy fight, and it means there's disagreement on the best way to run the company. SERVOTRONICS board doesn't support BHW's choices and is urging shareholders to vote for their own nominees. That's why the board is urging you not to sign or return any white proxy card that you might receive from BHW. Choice W, think of it like two teams competing for control of the company. If you as a shareholder have any questions on the proxy materials or what you should do, there are resources such as Georgeson LLC that you may contact and ask for assistance. It is important you submit your proxy on time to ensure your vote is counted by marking, signing, dating, and mailing the enclosed blue proxy card in the postage paid envelope provided. This shareholders meeting is happening sometime in 2025. Shareholders will vote on electing 5 directors, giving an advisory vote on executive compensation, which is also known as say on pay, indicating how often they want to vote on executive pay in the future and ratifying the company's choice of auditors. The board is clearly not happy with BHW trying to put their people on the board. They are saying loud and clear that they do not endorse any of BHW's nominees. The board strongly recommends that you vote for each of the company's FAB director nominees. So if you get anything from SW, the SERVOTRONICS board is saying ignore it. The SEC wants to make it easy to vote by implementing the use of a universal proxy card. So both the board's choices and BHW's choices are on it. But the board still wants you to vote for their people using the blue proxy card they sent you. Again, the board is really pushing you not to sign or return any white proxy card from BHW and to only use the blue proxy card. Here is a trick. If BHW decides to withdraw from trying to take control and you already gave them the go-ahead by signing their proxy authority, you can still submit another blue proxy card or blue voting instruction form to cancel it out. You may get multiple proxy cards if your shares are held in different accounts, either in your name directly or with a broker. You need to vote for each of them to ensure your vote is counted. The board does not think there will be other things to do at the meeting other than what we previously discussed. However, if there is anything else, the people named in the proxy card will vote on those matters using their best judgment. To get a better understanding of this drama, the document gives a little background on the situation. Back in 2021, the company's CEO resigned after an internal investigation. Then in 2022, they brought in some new directors. Starting around December of 2022, we brought in some new directors starting around December of 2022. BHW started buying up a significant amount of the company's shares. Over the course of the next few years, HW kept upping their stake in the company and asking for strategic alternatives such as selling the company or merging with someone else. They even sent over a resume for a potential board member. The ownership of BHW is also interesting. It is primarily owned by Founder Software with a small stake owned by Parabellum Consulting. There was also a voting agreement in place between these companies, however, that was terminated earlier this year. Another problem that was presented was that BHW may have pledged some shares as collateral for a mortgage. The company is very unhappy with that because they have a rule against pledging shares. There appears to be a back and forth as the company investigated BHW's intentions with asking for a board member seat. All the while, the board made a committee to evaluate the strategic alternatives that BHW has been asking for. Finally, BHW launched a website with their own plan to save the company. BHW offered a settlement of adding more people to the board. The company rejected it. If BHW wins this fight, it could trigger some changes in control clauses in the company's agreements. That means certain executives could get severance payments or have their stock options vest sooner. Here is a rundown of all of the people that are proposed to be on the board. The board is made up of directors that have skills such as investment management, corporate governance, and knowledge of capital markets. The board of directors has a standing audit committee, compensation committee, and nominating and corporate governance committee. They are all independent and meet at least once a year to ensure corporate governance is being followed. The Nominating and Corporate Governance Committee picks new nominees to the board of directors and takes suggestions from incumbent board members. The non-employee directors get paid $60,000 a year plus expenses for going to board meetings. Also, they get $25,000 of restricted stock. Shareholders will vote on if the directors on the board should be elected and if they approve of the compensation to the executives. They will also get to vote on how often they think they should get to vote on executive compensation. And finally, they get to vote on the independent accounting firm. The board of directors are really pushing you to vote for all 5 of the board's nominees. The executive officers of the company include William Farrell Jr., the Chief Executive Officer, Robert Frost, the Chief Financial Officer, and James Takacs, the Chief Technical Officer. The board and its compensation committee wants to make sure the executives get paid fairly, but also in a way that gets them invested in growing the company. This means that they mix some guaranteed money with money that is only paid out if the company does well. This is done by using short-term cash incentives and long-term stock-based compensation. Let's take a quick look at the summary compensation table. The total paid to William Farrell in 2024 was around $24,000. The total paid to Robert Frost in 2024 was around $372,000. The total paid to James Takacs in 2024 was around $272,000. It's also important to note the executives also have stock that hasn't vested. This means they have to stay with the company for a certain amount of time to actually get the stock. A new rule by the SEC requires the company to make a table showing pay versus performance at sea. Here are the key numbers to the total paid to William Farrell based on pay actually received, and the accounting rules of the SEC was 402,000 stars avionate. Cut the net loss was $1.6 million, but a note, assuming enough shareholders attend the annual meeting, the auditor that was selected, Fried Maxick CPAs PC, will be ratified as the company's accountant for 2025. If you want to suggest new items for consideration at next year's meeting, that is 2026, there are certain notice and timeliness requirements that are outlined in the bylaws. Alright, so what's the story here? SERVOTRONICS is facing a challenge from an activist investor, BHW, who wants to shake up the board. The company is fighting back, urging shareholders to stick with their current team. This is a classic power struggle with a lot at stake. Based on these numbers, it looks like SERVOTRONICS is trying to stay the course, while BHW is pushing for change. The financial performance is a bit mixed, and this fight for control could create even more uncertainty. Overall, it seems like the biggest risk is that this internal battle distracts the company from focusing on its core business. So I thank you for watching. If you found this informative, please subscribe, like, and comment.